Good morning and welcome to VanEck's webinar on the investment case for Solana. I'm Kyle DeCruz and I'm joined today by Matthew Siegel, our head of research of digital assets and our portfolio manager. So today we're going to be talking about Solana, but I want to start really with a brief history of VanEck, and I think it's important to sort of accentuate throughout the history of VanEck, we've been focusing on a changing world. The world is constantly adapting and changing. And so in 2017, we identified the disruptive potential of Bitcoin and digital assets on financial services and beyond. And today we're going to talk about one of those potential disruptions in Solana. So VanEck, roughly, we're a $161 billion asset manager, with which about $5 billion of that is in digital assets across ETFs, private funds, and European ETNs. And of course, we're proud to present the VanEck Solana ETF, ticker VSOL. We believe that really provides convenient exposure to Solana. And so we'll be joined today by Matthew, who will talk a little bit in more detail exactly what Solana is, what it looks like in a portfolio, and really some of the characteristics of that. But really to summarize it, Solana delivers low fees, fast transactions, and high efficiency that drives a lot of their ecosystem growth. And VSOL is a cost-effective way to gain exposure to this ETP that securely holds Solana and earns staking rewards. And of course, and I'm sure Matthew will talk a little bit about that, Solana offers some real unique benefits, but again, it does remain subject to technological and market risks. So for now, I'll introduce Matthew and turn it over to him.
Thanks, Kyle, and thank you for everyone for joining the call today. I think that one big picture comment I want to make is that there've been a lot of crypto ETFs that have launched over the last year, and there are many more to come. And you may have noticed that we've been a bit more conservative than others in bringing these single token products to market. We look for internal conviction that the asset is, a good investment. We look for counterparty support from all the traditional finance players who make the plumbing of an ETF work, and we look for client demand. And when you look across the 41 million crypto tokens that exist, we don't find too many tokens that tick all those boxes. And I think investors have observed over the last 20 years that these digital platforms tend to have winner take all or winner take most characteristics. The vast majority of these tokens go down from launch. And so we're looking for opportunities where the blockchain truly has the potential to consolidate market share over time and form the backbone of a new internet capital market. These smart contract platforms like Ethereum and Solana are programming environments, database software, on top of which developers can build storefronts that enable them to serve a global audience. And it's changing how capital formation occurs. And we think that Solana is a leader in this space and has the potential to continue its market share gains. So just to introduce the project, Solana is a layer 1 blockchain, which means it's a smart contract platform on top of which developers can build applications. Those applications include finance, gaming, consumer, infrastructure. The network is unique in its speed and cost. So the time between each block is very, very fast, and that enables tens of thousands of transactions per second. So we calculate that Solana has processed over 450 billion transactions since it launched in 2020. That's one of the highest among all major blockchains. We observe that more than 1,100 validators, these are entities that download the Solana software, are helping to secure the network. So it has become a truly decentralized. And we've been very impressed with the team led by Anatoly Yakovenko, who is a former Qualcomm engineer. We count more than 4,500 active developers who are building on top of Solana, 60 million monthly active addresses, a little bit of a misnomer to call them users, but addresses. One user can have many addresses. Of those, 4 million are paying fees each day to use the blockchain, and those fees accrue to stakers. Those are people who buy the Solana token and then lock it inside of a smart contract, limiting their ability to sell for a number of days, but in return earning some percentage of the yield, and the yield is partially comprised of the fees that users are paying. So Solana has been unique in that there have been times when the fees where the project has a positive real interest rate, meaning that the yield that stakers earn has exceeded the inflation rate of the token. That's a very rare and positive condition among smart contract platforms. It's been limited to Solana and Ethereum. It's part of what generates our specific conviction in this asset. Next slide, please.
Yeah, Matthew, if I could just for a minute, if anyone has any questions, please just submit them to the Q&A box at the bottom of the site. I think we've had many years to kind of educate the audience on Bitcoin, and I think Solana is a project we're really excited about, but it is very different from Bitcoin. So please, if you have any questions, please submit those and we'll address those throughout the presentation.
Yeah, so what are Solana's key advantages? I'd say the number one is simply that the blockchain has been engineered for speed and low latency. Conservatively, we estimate that this blockchain can process up to 65,000 transactions per second, 10,000 more than Bitcoin, 1,000 more than Ethereum. It puts the network on par with some of the higher frequency digital networks that you may be familiar with, such as Visa or NASDAQ. And those transactions complete in less than a half a second. So it's several orders of magnitude faster than many of the competition, and it makes the blockchain applicable for microtransactions because the cost is so much lower, so very much a retail technology, but also for institutional grade, high frequency trading. So this blockchain, similar to Ethereum, is a variation of a proof of stake architecture. That means that it does not take a predefined amount of electricity in order to participate in this network like it does with Bitcoin. Rather, a stakeholder simply needs to hold the coins and commit to a period of illiquidity. And by doing so, their computing infrastructure can help secure the network by participating in the consensus mechanism. So Solana has its own wrinkle on the proof of stake architecture, which they refer to as proof of history. And this goes back to the founding DNA of the project and Qualcomm. It's really about the speed of these networks and accounting for the fact that the speed tends to increase over time as our silicon and semiconductor infrastructure also gets faster. So this proof of history gives Solana a cryptographically verifiable clock that all of the validators can reference and kind of acts as a starting point. Now, due to that efficient setup, the transaction costs so much lower, the speed so much faster. It's proven to be an attractive computing environment for entrepreneurs building applications. Many of those applications are in the financial services business and focused on speculation, and we'll get into the details on that going forward. But these applications are generating real revenues. That activity has moderated in recent quarters. We can get into the reasons why, but you're essentially buying Solana on a correction here. Many of the speculative apps have shrunk as we've gone through the year. Solana has a relatively simple inflation schedule. So just to contextualize, Bitcoin's inflation rate falls by 50% every 4 years on what's known as a halving schedule. So last April, the inflation rate of Bitcoin fell from 1.8% to roughly 90 basis points. In the case of Solana, that inflation rate began at 8% annually and then drops by 15% of the 8% each year until it reaches a terminal rate of 1.5%. That inflation is designed in part to pay for the validators who are staking Solana. The rewards to stakers, which consist of that monetary inflation, plus a portion of the fees that users are paying to make transactions. Those rewards are distributed to validators proportional to their stake in the network, i.e. how many coins that they own. And that's why the architecture is known as proof of stake. The validators make money based on how many transactions they process and the cost of those transactions. And the validators can also earn value based on the sum of the value contained in each block that they process, so the size of each transaction. Next slide, please. The Solana relies on this network of validators. Validators are stakeholders who've downloaded the Solana software and commit to running it 24/7. So by downloading that software, they can verify the transactions that occur across the network, and collectively they maintain this transaction record, which is known as a ledger database. Validators take turns being the leader. The leader receives all the transactions for that set time period, which is known as a slot. Each slot lasts 400 milliseconds, and then the leader is rotated every 5 slots. So because synchronizing this clock time across the globally distributed validator set is so difficult, that's why Solana created this architecture known as proof of history, which enforces that global consensus by standardizing the time between the blocks. So the validators are earning transaction revenues from the users, and they're also earning additional income from auctioning off the ordering of the transactions in the blocks that they produce, so that leadership role. The Solana stakers receive about 97% of the blockchain's value, and then the validator companies receive the balance. Next slide, please. So here you can see the average transaction cost compared to a handful of the larger blockchains. So for a Bitcoin transaction right now, users are paying about 64 cents. Ethereum, roughly half of that, 36 cents. Binance, close to 4 cents. Ton, close to 2 cents. Solana, less than 1 penny. So we still see a real use case for these. You know, the smaller the transaction, the more economically viable a tiny transaction becomes. And so we see Solana as particularly relevant in high frequency trading, but also in retail-oriented projects such as meme coins, or potentially social media, which would help creators monetize teeny tiny pieces of content. Next slide, please. The project launched in 2018, and then the beta version of the network went live in 2020. So the network has been bootstrapped from a de minimis market cap to something close to $100 billion. We think that the architecture is a novel design, and we're impressed by the aggregate revenues of all of the applications that have built on top of Solana. The apps keep roughly 90% of the value that they create, sharing 10% with Solana stakeholders, that would be validators and stakers, and that model gives developers significant savings compared to the platform fees that Apple and this should say Google charge, which are typically 15 to 30%. So we observe that the Solana network secures roughly $25 billion in total value locked. That's folks using Solana-based assets as collateral for loans and other purposes, along with $16 billion in stablecoins. So Ethereum is still the number one platform for stablecoins, with roughly half of the 300 billion or so of stablecoin assets. But Solana has been a share gainer in this regard. We can see in the last couple months, as an example, PayPal USD on Solana has been growing rapidly. So we're quite bullish on the prospects for Solana to continue to take share of stablecoins. Next slide, please. As I mentioned, Solana operates on this proof of stake consensus mechanism, which allows the holders of Solana to support the network by delegating their tokens to validators. The validators are responsible for confirming the transactions, maintaining the blockchain, and then the delegators receive a share of the rewards that are earned by those validators. I'm not going to go through each of these bullets. But if you have interest, please refer to them later. Next slide, please. So the VanEck Solana ETF is staking our Solana coins. One benefit of staking Solana compared to staking, say, Ethereum is that the cooldown period is much shorter. So when you click unstake on your Ethereum coins, it can take more than a month for you to receive those coins back and then eligible to sell them. In the case of Solana, that cooldown period is somewhere between 2 to 3 days. So it makes it, in a way, it makes it much easier for an ETF manager like ourselves to stake the Solana coins that we hold in an ETF without being overly worried that redemptions out of our ETF would cause some type of asset and liability mismatch. So that's just one of the features, along with the low cost and the fast transaction speeds that make Solana an attractive asset for traditional finance market participants. So just for the details of the VanEck Solana staking, we have begun to stake those coins. You can see the yield, or I should call it the APY that we earn, is on our website. We have partnered with a publicly traded company called Sol Strategies, who is handling the staking infrastructure for us. And then those staking rewards accrue daily at the account level and are reflected in the NAV of our ETFs. And then the rewards, well, we'll see, because there's some debate at the SEC about how to handle these rewards and whether they should be paid out quarterly to fund shareholders or whether they can be reinvested. So stay tuned on that. Next slide, please. Next slide. Some of you may have seen this heat map, which Merrill Lynch has made famous over the years, their asset quilt. And if you did this for Bitcoin, you would see that Bitcoin tends to outperform most other asset classes in 3 out of every 4 years, and the year that it underperforms is 2 years before the halving, so that would be 2022. In the case of Solana, it has a reasonably strong track record of outperforming crypto in a bull market. And we attribute that to the fundamental share gains that the network has achieved, along with its architectural advantages of high speed and low cost. So when you average Solana's returns over the last 5 years, average return of 259%, the best of the asset classes and digital assets, large cap at least, that we track. So 2022 was the real bear market. Bitcoin fell 78%. Solana fell 94%, but did manage to approach its all-time highs in 2025 before the most recent correction. Next slide, please. This is, rather obvious that if you introduce an asset class that's gone from zero market cap to $80 billion in market cap over 5 years. But the next slide, just contextualizing what it means for Sharpe ratio and the drawdown. When you add Solana at a 1% position, so that would be the third row down. Well, I was going to talk about position sizing, but let's go on and see if we get any questions on that. I'll come back to it. Next slide, please. One benefit of introducing a position in Solana alongside, say, Bitcoin and Ethereum is simply a lower correlation over time with stocks, gold, US bonds. This table just simply observes that Solana's correlation with the S&P, relatively low at 0.38. It does have quite a positive correlation with Bitcoin, 0.73. We would expect over time for that correlation to come down somewhat. I think it's been relatively clear that Bitcoin is not competing with Google and Apple on the programmable infrastructure front. Bitcoin is not really attracting new developers to build applications on top of. It's a relatively inert asset that is competing or collaborating with gold for large-scale settlement. In contrast, Bitcoin and ETH are higher frequency programmable database environments, and that makes it, I think, when analyzing them, more appropriate to look at the applications built on them and how much revenues those are earning. And as those applications hopefully proliferate and diversify beyond just the speculative use case, there's a good chance that Solana's correlation with Bitcoin can fall over time. Next slide. Lots of market structure risks when it comes to smart contract platforms. These assets are very reflexive in the sense that many of the applications built on top of them involve speculation and trading. The TVL, the total value locked within these ecosystems, consists of using the base asset as collateral for loans or for futures positions. And that means that when leverage comes out of the system at kind of on a system-wide basis, that reflexively leads to deleveraging, which leads to further selling. And that's why you get these very high levels of volatility. So that's one of the market structure risks for sure. But things that you should be aware of, smart contract bugs or hacks, the risk of validator or network level outages. And Solana used to have issues or bigger issues in this regard, but over the last year, Solana has experienced virtually no downtime. We've seen several instances just in the last few weeks where many of the world's largest websites went offline because of infrastructure hacks in Web 2 companies. I think it's important to note that Solana actually had no downside during those periods. And in that regard is beginning to show some of the fruits of its increasing decentralization. Yep, next slide. What drives the price of Solana? When we analyze Bitcoin, we typically do it through three primary lenses. The first is global liquidity. Bitcoin in particular exhibits a negative correlation to the dollar and a positive correlation to money supply growth. So because for the moment, many of these assets are highly correlated with Bitcoin because of that reflexive nature, that global liquidity lens is still important for analyzing Solana. The second lens that we use for analyzing Bitcoin and cryptocurrencies is system-wide leverage. And you can observe that by looking at the funding rates to put on a leverage position, either on the CME or in DeFi. And periods of high risk appetite and high demand for leverage, the subsequent returns for the token are generally weak, and vice versa. So in that regard, there was a major leverage washout in October, and we think that basically most of the speculation was washed out, and now is a time when stakeholders are rebuilding their leverage positions. And then the third lens that we look at, so it's global liquidity, it's system-wide, meaning crypto leverage, and then the third is on-chain fundamentals. So are people using this network? Are active addresses rising? Are fees rising? Are application revenues rising? At any given point, one of those three variables can be more meaningful for the price, and frankly for crypto generally, it's been more driven over the last couple of years by global liquidity and system-wide leverage than it has been by the third, the on-chain fundamentals. But those correlations tend to be a chameleon, and there will be a time when the market pays more attention to fundamentals. And so here are some of those fundamentals that you'd want to be on the lookout for: transaction volumes, active users, new applications, the percentage of SOL that is staked, and then the network stability. Next slide, please. Year to date, Solana has been kind of a middle of the pack performer. So there's really only three major projects that are up this year. Bitcoin is down, call it 6-7% year to date, and Ethereum and Solana and the other layer one smart contract platforms have underperformed the rest of crypto. Trading volumes are down year over year. We have some very tough comps with the post-election rally that we saw in November and December of last year. So trading volumes are down. The number of wallets that are interacting with the blockchain are down, and arguably Solana has lost some of that kind of speculative market share to other chains like Base. So we estimate that Solana market share of decentralized exchanges peaked at 65% last year post the election with the meme coin mania. Still a pretty robust market share of 36% today, and up from its trough of 32% 2 months ago. Next slide. Number of addresses that hold balances over 10 SOL. That's been growing very strong since 2021. Slight period of consolidation here over the last 6 months because of the dynamics that I just explained, but still over 1 billion unique Solana addresses that hold non-zero balances, 830 addresses that own at least $1,000 worth of SOL. So we're optimistic that this graph will resume its upward trend. Next slide, please. The network revenues is highly variable, as you can see from this chart. The activity can be turbocharged by speculation around novel assets and specifically financial apps. The share of crypto trading done on decentralized exchanges went through kind of several years of market share gains. DEX is gaining share from centralized exchanges in the aggregate. Those share gains have paused or marginally reversed in recent months. We're of course noticing more competition among the centralized exchanges, companies like Gemini and Bullish going public this year, spending a lot of marketing dollars. So I'd say it's a more competitive environment for crypto traders over the last couple of quarters. Next slide, please. These are the top 10 applications that are built on top of Solana, and we're measuring them by the last 30 days of revenues that they earned. So the top 3 apps on Solana responsible for roughly 60% of all of the app revenues. The top 10 apps have generated roughly 90% of all of the application revenues. And when you look at the list here, they're basically all trading apps. Some exceptions like Phantom is a wallet. Jito is an infrastructure application, but many of the others here are futures or spot crypto exchanges. And this obviously will lend towards volatility of the base asset, because when speculation is hot, then you get more trading revenues on these top apps. That feeds into more Solana fees that are paid. So again, a very reflexive asset. Solana daily active wallets, it's a 200% CAGR since December 2022. You can see that what I described as the tough comps that we're now lapping post the election. The number of wallets on Solana peaked in January of last year in response to the meme coin frenzy. Solana averages nearly 3 million daily active wallets, and we calculate that as about 21% of all wallets across all blockchains. That's a ratio that peaked at 38%. It's now down to 21%. Next slide, please. One of the most important qualitative analyses that you can do to measure the health of a blockchain ecosystem is by observing the number of computer developers who are touching the code. Solana active developers have grown at 150% CAGR since 2020. We estimate that 16% of all active crypto developers are currently working on Solana. That market share is relatively stable over the last 1 year, but beneath the surfaces, we can see that those who are considered full-time Solana developers, that number continues to grow. It was 800 a year ago. It's now 1,300, and we think that speaks to the attractive architecture, the high speed, the low fees of this blockchain. Next slide. Just putting some of the puts and takes around what can be bullish or bearish for Solana specifically. In my opinion, the number one variable is, if I go back to that three-pronged lens that we think of: global liquidity, ecosystem leverage, blockchain fundamentals. The first two are still tremendously important. So a better liquidity backdrop and a rebuilding of confidence in the space is likely to accrue to one of the clear winners in the space, like Solana. But if we look at more idiosyncratic bullish catalysts, one would be continued stablecoin progress, and I noted kind of PayPal's momentum there. Western Union also experimenting with stablecoins on Solana. A resurgence in meme coin interest that tends to be cyclical, and Solana is really the powerhouse of meme coin trading. There's a number of upgrades to the code which may materialize over the next couple of quarters, which could increase the transactions per second by up to 10x. So that could be a step change in the throughput, and if it occurs without disruption, would likely be a positive catalyst. The Solana community is debating the possibility of lowering the inflation rate in order to reduce the dilutionary issuance. That could be a positive for the price of the token. The digital asset treasury companies, so MicroStrategy is the most famous among the Bitcoin companies, but we count 3 or 4 Solana treasury companies. Right now, they're trading below their net asset value, so it's very hard for them to issue equity and buy Solana. But if those stocks turn around, that could lead to accretive equity issuance and more spot Solana buying. On the bearish side, clearly there is a lot of competition in this space. The barriers to entry are not tremendously high. We highlighted a couple of competitors that have strong technical foundations and growing communities. Given how nascent this asset class is, all of these projects could work. But some see the competition as a negative. The DAT weakness, if that persists, it's going to be hard for listed corporates to increase their purchases of Solana. There have been a couple of hacks this year, not of the Solana consensus algorithm, but which impacted Solana holders and exchanges. Solana is famously hard to code, so that could be a negative catalyst. And then if the network downtime were to reemerge, although we haven't seen anything on that front this year. Next slide. Yeah, thank you for considering the VanEck Solana ETF. One of our investment cases for expressing a bullish view on cryptocurrencies via ETF is regulated custody, lower transaction fees, so naive retail buyers on crypto exchanges can still pay 1.5% to 2% spreads on average. As I mentioned, solving for regulated custody, and then being able to monitor your position inside of traditional brokerage accounts is a positive for many. Last slide, I'll just leave it at this slide, which is an illustration of relative market share over time. Kind of an eye chart, but I think what it shows is that there's really 6 or 7 projects here which have the potential to gain considerable market share over time. Solana has done a great job from launch at becoming the #1 platform for high frequency, low value, speculative trading. And we're optimistic that developers will broaden that use case beyond just speculation to go after other end markets, specifically social media and the tokenization of real world assets. We can end on slide 32, which just summarizes. This is a high throughput layer one blockchain designed for speed, scalability, low fees. It's a competitor to Ethereum in that it offers smart contract programmability, and we think that a small allocation to Solana is a reasonable way to express a bullish view on this asset class, which continues to grow users from comparatively very low base. That is the conclusion here. Are there any specific questions I should get to, Kyle?
Yeah, Matthew, before we jump into questions, I think we're going to put a poll up on the screen right now. If anyone would like to request a meeting to get into more detail, or perhaps if your questions have not fully been answered, so you can respond to that. We'll give you just a moment to do that. And then we can get to several questions we have, Matthew. Great to see. Let me stop my screen here and give it a second to finish the poll. So some of the questions are based sort of on price and the drawdown, Matthew. And as kind of we wait for this poll to finish, you know, a lot of folks are wondering if this winter weather brought along these bad prices, or if Santa's going to put coal or gifts in our stockings this year for Solana and the crypto industry as a whole. So perhaps maybe we can start there. But before we do, let me just end the poll here. Okay.
So what was the question? Is Solana going to go up next year? Is that the question?
So essentially, Solana is down now. What's kind of your view over the next 6 months? And if Solana does lose or remain down, which of these blockchains, and we talked about Ethereum, we talked about sort of Visa, MasterCard being competitors as opposed to Bitcoin being a competitor to those. So who wins if Solana loses?
You know, it really depends on what's happening to the rest of the market. So, you know, this year was the year of equities. And, you know, at VanEck, we did a pretty good job of pivoting, you know, many of our active strategies to capture the growth in the listed equity space. The biggest impact of the deregulation, as far as I'm concerned, is that traditional investment banks are able to underwrite equity capital formation in the space, and the equities have dramatically outperformed the underlying crypto tokens, at least among the large caps. So I think in order to change the narrative there, we need to see, in the case of Solana, decentralized exchanges resume their market share growth versus centralized exchanges. That's something I mentioned, is that DEXs have kind of been losing market share over the last couple months. So that would be a positive. So it would be a real positive if apps from other sectors started to generate, you know, real revenues. And I think maybe that would kind of give investors confidence to give a kind of a higher multiple on some of those revenues. Yep. Next one.
Perfect. Let's see, we've got quite a lot. And again, if we can't get to all these, please, we'll follow up with you to make sure we answer all these questions. But let's start with this one. Should Solana supplant Ethereum because of its speed and cost? Would this mean that at some point Solana would be supplanted potentially by the next faster, cheaper network?
That's definitely a risk. You know, when we look at the top 5 ex-Bitcoin cryptocurrencies each year through the cycles, there has tended to be quite a lot of turnover. I would say that this cycle, perhaps there's a case for less turnover because of the institutional adoption that is now occurring. Seems unlikely that a company like PayPal is going to suddenly decide to dump Solana where they've put in considerable investment. Yeah, so I think that the institutional adoption is creating more stickiness than we used to have.
Got it. All right. About if you look at the types of transactions that occur on Visa and MasterCard networks, are there any categories other than the prediction markets that you think Solana might be able to siphon away?
Now, I mean, this is not something that's played out yet, but I still think that with the emergence of AI, there's going to be demand for content on social media to be monetized. And crypto, its killer app in a way is the provenance, where where every token has been at every time. It's very hard to do a deep fake. So if a creator could tokenize their content and earn tiny royalties as that content is consumed, that seems like a natural use case for a very cheap and fast blockchain such as Solana. But that sector is, a graveyard of capital and has not really worked. So that would be, a 0 to 1 moment. Um, just to kind of apples and orange, just to contextualize here, when we look at Ethereum gas usage, roughly 50% of Ethereum gas usage is used for DeFi transactions. Like 20% is stablecoin transactions. In the case of Solana, right, 90% of those app revenues are coming from speculative, and virtually none from stablecoins, although the stablecoin growth is starting to materialize. So there's still even some regulatory barriers that need to be fixed. It's still hard to buy Solana stablecoins in New York, for example. But if we saw clear market share gains by Solana-based stablecoins, I think that would be a positive. And that growth is materializing. So I wouldn't go so far as to predict that Solana stablecoins will flip ETH over the next year, but I think they're going to grow much faster.
Got it. And I think we have time for a couple more questions, and I'd like to answer a few I think I have in mind. But before that, Matthew, quantum computing is a hot topic these days on the risks relative to Bitcoin. But some folks want to know which crypto has more of a risk of hacking and when quantum computing goes mainstream. Is there a difference between them, and specifically to Solana, what is the risk there?
Yeah, good question. I mean, so in terms of just the pure, like, overwhelming the consensus mechanism and double spending coins, the math of the proof of work systems like Bitcoin versus the proof of stake systems like Solana, it's just simply harder to overwhelm Bitcoin and double spend tokens. That said, there's a benefit to being more centralized as well, in that the Solana Foundation could endorse a quantum secure signature scheme and probably push validators to upgrade in a particular standard faster and with more consensus than Bitcoin, which is really like, the Bitcoin community is like herding cats. It's very hard to get folks kind of on the same page. Probably easier to do that with Solana. So those are some of the trade-offs, like more vulnerable on the one hand, but more flexible and probably faster moving to implement a fix.
Perfect. Now we have a couple questions on the ETF itself, the VanEck Solana ETF, VSOL. The question is, do you view VSOL as a trading ETP, or do you view it more as a buy and hold type allocation?
I mean, that depends on the it depends on the investor, right? I mean, some investors are buy and hold investors, and some investors are higher transaction, faster moving. So not for me really to answer that one. It's a very volatile asset class. So if you are a buy and hold investor, you need to size it appropriately. And from our perspective, that means dollar cost averaging, setting position sizes that you can afford to lose, and generating enough conviction so that if the asset goes down by 30-40%, you can buy it and not just sell at the bottom. So if you're that type of investor, it's a buy and hold. If you're the type of investor who thinks that you can predict global liquidity, ecosystem leverage, and on-chain fundamentals, every month, go at it and try to trade it. Yeah, I'm more the first.
Perfect. And maybe I'll take this one, Matthew. But the question is, why did we choose Sol Strategies as our staking provider? And feel free to jump in, Matthew, as well. But I think a lot of diligence goes into to selecting our partners, and that includes on the custody side as well as in the staking. And I think for us, there's a lot of great staking partners and validators out there. But there were a few key things that we felt really helped state the case for Sol Strategies. One, they're managed by a great team, really veterans of the Solana ecosystem. Two, they're institutional grade. They have the proper audits, SOC reports, the types of security you'd expect at the institutional level. And Matthew, please feel free to jump in. But I think another thing we really wanted to address is with this ETF, you'll see there on the screen, the net expense ratio is 30 basis points. But for the first 3 months, we've waived that fee as well. And in addition to that, Sol Strategies has kindly matched us on that and waived the staking fee for that same period. So you'll notice and reflected in our website that the gross and net staking rewards rates are actually the same. So obviously a great value there as well.
Yeah, good job. Nothing to add.
All right, maybe we'll end with one last question. Matthew, did you include meme coin trading as financial activity on the charts earlier or do you bifurcate meme coin activity and trading as separate from financial activity?
We did include it. We did include it. So Pump Fund is basically a meme coin platform, and I would include that in speculative, kind of financially driven activity. But there is a world in which like meme coin and social media content converge. Several entrepreneurs have tried to kind of build that social media platform where the content creator gets paid the more their content generates clicks and shares, and you can speculate either on the creator or on the content itself. So that maybe things evolve towards that way, and someone figures out the secret sauce to decentralize social media and make a more transparent algorithm and pay creators directly. But right now, I include it in the speculation side.
Perfect. Well, thank you, Matthew. I appreciate your time today. That was fantastic as always. And again, thank you all for joining. For those that would like to contact us and get more information, please reach out. And again, VSOL, VSOL is a great way to get convenient exposure to the Solana ecosystem. Thank you, and have a great day.